Investment opportunities in India have been gaining significant attention, driven by the country's robust economic growth and favorable demographic trends. But what are the key factors that make India an attractive destination for long-term investment opportunities? And how can they navigate the complexities of this dynamic market?
India has the ability to do deals with certain countries who might be opposed to other countries from a geopolitical standpoint and stand in the middle. And that really marks out India as a place where some of the exciting opportunities of the future will come.
Welcome to The Bid, where we break down what's happening in the markets and explore the forces changing the economy and finance. I'm Oscar Polito. Vivek Paul, head of portfolio research and UK chief investment strategist for the BlackRock Investment Institute, will help me explore the investment landscape in India, the opportunities in public markets, and the long-term growth potential driven by the country's economic and demographic strengths. We'll also delve into the implications of India's rapid digitization and resilience in a fragmented geopolitical landscape, and discuss the challenges investors should consider in this evolving market. Vivek, thank you so much for joining us on The Bid.
Thanks for having me, Oscar.
Vivek, when you and I talk, it's usually about global markets. We talk about the global outlook, and we take a very holistic view on the world economy. But today we want to zoom in on India, which is a topic that we have covered in the past as a country that presents a really interesting investment opportunity. Maybe you can help remind us, how is it that the mega forces are really making India an interesting opportunity?
It's a great question. And actually, that thing you mentioned about the global versus the country, actually, in some ways, India is a microcosm of some of those global opportunities and the mega forces that you suggested. And it stands out particularly well on some of them. Demographics is one that I'd highlight. If I think about the overall developed market world, the G20, etc., and I look at the last 20 years, effectively we saw 500 million people added to the workforce in that period of time. Forward estimates suggest that that's going to be negative. It's going to be a drag in terms of the number of people coming into the global workforce, but India stands out at 140 million positive. So you can see that in the relative global story, India has a really strong positive advantage on demographics. It's not just demographics, though. AI obviously has been something that we've been talking about on The Bid for a long time, and it's shaping markets. Imagine the infrastructure behind AI, like data centers. The world's largest data center is basically being planned in India, something like 5 times the capacity of the current largest data center in the world. So you can see that's another way in which this country is a microcosm of some of the global opportunities. And then geopolitical dynamics. This is an environment where old alliances are fraying, new alliances are being formed, and India is a multi-aligned nation. India has the ability to do deals with certain countries who might be opposed to other countries from a geopolitical standpoint and stand in the middle. And that really marks out India as a place where some of the exciting opportunities of the future will come.
You mentioned the demographics, that the world is getting older and therefore the working age population is shrinking, but not in India where it's actually growing. And then I didn't know that fun fact about the largest data center in the world being built in India. But let's just focus on demographics for a second. Why is it important from an investment perspective that you have a country whose working age population is going to grow by 140 million people over the next 20 years?
So when you think about overall growth at a countrywide level and you think how to improve that growth, a really simple level, you can either do 2 things. You can add more inputs, as in like people, or you can effectively make every single worker more productive. And so if you think about those as the 2 high-level levers one can pull to improve economic growth, well, India has an enormous advantage on that first one, as I just mentioned. That 140 million more people, that's really sizable relative to many major global economies in terms of the overall population. It's an enormous amount. And in addition to that, the productivity benefits that the world can experience over the course of the coming decades, there's no reason why India can't also experience those benefits too. So if you think about that dynamic and you think about the global growth picture, that's part of the reason why, if you look at the forward estimates, India's growth expectations start with the number 6. That is 3, 4, or 5 times as large as some of the equivalent growth expectations for some of the major developed market economies. So you're seeing that as a 2025 story, but I think you're also going to see that relative dynamic play out for the years to come. So going back to your central question, why does it matter? Well, there are 2 main levers of pulling global growth, and India has a huge advantage of one of them.
Right. More workers equals more economic output. And maybe I could ask you a follow-up to that, because sometimes just because an economy is growing fast doesn't necessarily mean that its stock market is a good investment. Like economies and stock markets are different things. Sometimes you see the US economy growing slowly, but the stock market's doing very well. So why is it important that the Indian economy growing fast also then creates opportunity in the stock market? Are those two related?
They are related. That's a great point you mentioned. And look, there are other countries that are out there, China being an obvious one, whereby that relationship between growth and the stock market activity doesn't necessarily go in the same way. And I think there's an important additional element here, which is, I guess, the sentiment perceived towards that country, the perception of market stability, the perception of business friendliness, etc. And if that dynamic is trending in a different direction to the economic growth, well, it's not obvious that you see foreign investors want to invest in that country, and therefore the stock price improves. I don't think that's quite the same in the Indian context. There's much more alignment there. This is a country which has presented itself as business friendly. Yes, there are things that can be improved, of course, but the idea of materially changing the shape of the economy on a period-to-period basis seems less likely in India. And that's, I think, part of the rationale why you're going to see more of a tight relationship between that overall growth picture and the performance of the stock market. And there's a related point, actually, if I can make on this, which is the digitization of the Indian economy more broadly. That actually is working to bring more of the domestic population into the stock markets, if you like. And one thing I'm struck by, I've been fortunate enough to visit twice in the last couple of months, and on the journey from the airport to BlackRock's office, there are so many advertisements on the billboards talking about the investment opportunities, talking about ways in which the person on the street can effectively get involved in the stock market. Order of magnitude more than I see in London, than I saw in New York when I was there with you just last week. So I think that dynamic of the greater share of the population getting involved in the stock markets will also help foster that closer relationship between growth at the economy level and the stock market performance.
Vivek, the point you make about technology facilitating more investors in India participating in the market is very consistent with what Larry Fink talks about in his annual letter to investors, which is the importance of more people participating in capital markets and saving for the long term. So it's good to hear that that story is already playing out in India.
Absolutely, Oscar. And it goes to our broader point, right? India is a microcosm of some of the global dynamics we're talking about.
So a growing population, which helps sentiment around foreign direct investment, more people getting invested in the stock market. And I want to come back to the mega forces because you mentioned AI, you've touched on digitization. Talk a little bit more about why that's a powerful force for the economic outlook.
I think it's really this idea that if you go back, say, 20, 30 years, you had a huge number of people who were somehow disconnected to the broader economy, right? And the dynamic of digitization, the fact that the prevalence of mobile phones, the ability to pay on those mobile phones, just brings so many more people into that broader economy. And I think that's the most concrete way that you can see that digitization in effect. And to our earlier point, I think the fact that taxi drivers, people with regular jobs are able to then also invest in the stock markets, in the broader global growth story, is something that digitization has facilitated. And I think that's the reason why this is so central to the story.
We've also been talking a lot about inflation and interest rates on a global level. And again, usually when you and I talk, we are looking at those two variables across many economies. But again, zooming in on India, the Reserve Bank of India has been cutting rates, interestingly. I think we've been talking about the investment opportunity in India more through the lens of the stock market. What does the central bank cutting rates mean for the opportunity in fixed income markets in India?
There's a couple of things to unpack here, right? So firstly, why is the central bank thinking about cutting rates? It is in part because there's a cyclical dynamic in India, a shorter term dynamic that isn't as favorable as it was maybe a year, 2, 3 years ago. So we can't lose sight of that picture. That's part of the rationale for why those rates are being cut to encourage growth again. But that is a cyclical dynamic. That's not the structural one. And I think overall, when you're looking at the structural picture, if I look at the Indian yield curve, the interest rate you're getting on bonds at different maturities, actually today, the yield curve looks reasonable relative to where we might expect it to be in 5 years' time. And that's a difference to how I would anticipate the equivalent story in some of the developed markets where there's much more of a pressure towards higher yields. And so that's why you're right. We've talked a lot about the opportunities in stock markets. We might talk more about that later, but there's also opportunity in the fixed income markets because the level of yields we see now looks reasonable versus where they'll be in the future. And you've got a structural dynamic coming through as well, because Indian government bonds are going to be included in some benchmark indices in the course of the coming period, which is going to stimulate further demand for them. So I think that's an asset class. That's something where fixed income investors who can be broader in a global sense might want to be thinking about as an opportunity to hold more than a benchmark exposure.
Right. When you add India to a benchmark index, you basically have buyers in the market who sort of have to invest in those markets to meet the criteria of their portfolios and the benchmarks of their portfolio. So there's again, that structural buying power that enters the market. Vivek, earlier you talked about India being a multi-aligned country, which I think means that it's a little bit more insulated from some of the geopolitical risks that we often talk about with some of our guests. But obviously, tariffs have been in the news really all year, tariffs being implemented, particularly by the U.S. administration. How does that impact the outlook for the Indian economy and the structural story that you're talking about?
Yeah, look, it's a great question. And there's a lot of uncertainty around tariffs that's going to persist. And I think we've got to be clear, all else equal, if some of the tariffs that have been mooted are enacted, that is not a positive for any of the countries in the global economy, let alone India. But I think there's a couple of things to say from that. There's one which is a relative story. And if you look at the relative picture between India and some of the other Asian trading partners that are out there, on a relative basis, India is comparatively protected in terms of the numbers that are being talked about at this moment in time, in terms of the effective tariff rate with the United States. There's also a dynamic, which is that I think India is perhaps a little bit more willing than others, we will see, to potentially be a little bit more flexible in terms of the reciprocal dynamic with the United States. The point I'm making here is it's not a given that those tariffs that are being mooted will be enacted, because it could be that India lowers the tariffs on US imports into its own country as a means of effectively not experiencing the high tariffs on exports. So the numbers that are being talked about, I think we've got to view that as potentially the starting point in negotiations around what the eventual picture will look like. And then the final point I'll make is, again, if I look at the amount that the Indian sort of output relies upon exports to the United States, it's not an enormous amount relative to some other countries that are out there. So on a relative basis, it might not be that bad a story for India in particular, with the caveat that in general, if these were to be announced and to be enacted, effectively it's something that is a drag more broadly on global growth.
Right. It does have an impact, but maybe not as big of an impact on the Indian economy as it has on other parts of the world. And Vivek, in just listening to you talk, it's clear there's a structural growth story here in India, a growing population, digitization, AI. India is one of the largest countries in the world population-wise, so it represents a big part of the global pie in terms of GDP, but it doesn't represent often a big part of investor portfolios and global indices. So if we think about it through the investor lens, somebody who's considering Indian equities in their portfolio, what are some of the risks, but also the opportunities that you think they need to consider?
It's a great question. And the headline I'll give you to start with is that we would hold more in terms of Indian large cap equities than the benchmarks suggest. So net of all the things we're going to talk about, that's where I end up. And the reason I end up there is actually linked to some of the points you've mentioned. There's a structural story. We've gone through that structural story, but actually valuations are not that expensive in our view for Indian large cap equity. And I say that and I accentuate that because that isn't necessarily a consensus view. And the reason, because if you were to look even today after some of the recent comparatively poor performance of Indian equities over the last 6 months or so, actually price earnings multiples look comparatively elevated versus a long run history. So at first glance, you're thinking, well, why am I saying that they kind of look okay? It's because price earnings multiples effectively are a look back on the current price relative to trailing earnings. Actually, you need to look forward. And if I look forward, I think the earnings prospects for some of these companies in India is strong. I also think that the rates environment that we'll be in is a little bit different to the average of the last 10, 15 years with slightly lower rates. And the point I'm making is all else equal, actually, on a forward-looking basis, we should assume that the fair level of valuation for Indian equity is not just some sort of historical average, because this is a changing economy, a rapidly evolving economy. So I put all that together. The valuation story looks okay relative to the longer run history, especially if we take a look forward. I think about those global opportunities as the sort of this epicenter of some of these structural megaforces. And I look at some of the dynamics in other countries across the world. And I think India looks relatively good. And that's part of the reason, as I said, my starting point, this is something that we should think about investing more than a benchmark would suggest. Now, not without its risks, of course. This is still a rapidly evolving economy. And when we're thinking about emerging markets, there's always a higher risk dynamic that we need to consider. And that's the same in India as it is in other countries around the world. But taking into account the risk and taking into account the return opportunity, as I said, the conclusion will be holding more than benchmark.
It's rare that we talk about an allocation to a specific country in a portfolio, especially in emerging market. I think people do think about allocations to U.S. equities or maybe U.K. equities, but it's rare that we talk about it at a single country in emerging markets. But the BlackRock Investment Institute, which you're obviously a part of, has also talked about we're in a new market regime and a need to be more granular in portfolios to generate performance. So Vivek, thanks for sharing your insights, not just on the world economy as you usually do, but in this case, on the Indian economy and the Indian opportunity. And thank you for doing it here on The Bid.
Thanks a lot, Oscar.
Thanks for listening to this episode of The Bid. If you want to keep up with what's happening in the economy and the latest market trends, make sure to subscribe to The Bid wherever you get your podcasts.
This content is for informational purposes only and is not an offer or a solicitation. Reliance upon information in this material is at the sole discretion of the listener. In the UK and non-European Economic Area countries, this is authorised and regulated by the Financial Conduct Authority. In the European Economic Area, this is authorised and regulated by the Netherlands Authority for the Financial Markets. Reference to the names of each company mentioned in this communication is merely for explaining the investment strategy and should not be construed as investment advice or investment recommendation of those companies. For full disclosures, go to blackrock.com/corporate/compliance/bid-disclosures.